Welcome. In this video, will ZBCN coin make new ATH? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. One of the most prominent structural formations that stands out at first glance on the chart is a clearly observable ascending trend line. This trend line is not just an ordinary formation, as the price has touched it at 4 distinct points. In other words, this ascending trend line is not a coincidental slope. It is a strong technical signal that indicates buyers are consistently stepping in at certain levels and supporting the price from below. Such multi-touch trend structures are considered confirmed trends in technical analysis. This is because the price has approached this level multiple times and has reacted upward each time without breaking below the line. The most important feature of this 4-touch ascending trend is that each time the price approached this support line, the market responded with buying pressure, continuing its upward movement. This indicates that the overall market sentiment remains positive, and as long as this trend is maintained, the continuation of the uptrend is quite likely. Structures like these in technical analysis provide investors with significant signals in terms of both direction and timing. As the price moves along the ascending trend, the lows continue to form at higher levels than the previous ones, reflecting a gradually more optimistic market environment. The slope of the trend line is also noteworthy. It is neither too steep nor too flat. This moderate incline can be interpreted as a sign of a sustainable uptrend. Extremely steep trend lines often break quickly because the market cannot maintain that pace for long. However, a balanced ascending trend structure like this one suggests a sustainable positive price movement in both the short and medium term. Therefore, maintaining this 4-touch trend line increases the likelihood that the price may move to higher levels in the upcoming periods. The current distance of the price from this trend line also provides important insight. If the price is close to this line, meaning it is trading near the trend support, this could signal a potential buying opportunity for investors. As has happened in the past, the price may once again bounce upward from this level. However, if the price has moved significantly away from the trend line and made a strong upward push, then the trend's strength is confirmed, and it can be concluded that the rally may accelerate further. On the other hand, it is also important to consider what could happen if this trend line breaks. While the ascending trend is still valid for now, if the price drops below this support line, the entire market structure could change. In such a case, the commonly used technical analysis phrase, "the trend is broken," would come into play. This would mean that the price may begin to form lower lows. However, based on the current data and structure, the potential for the price to continue rising remains strong as long as it holds above this trend line. In conclusion, the existence of an ascending trend line that has been tested 4 times should be considered a highly valuable technical indicator for investors. As long as the price continues to stay above this line, it signals the sustainability of the uptrend, while a break below it would warrant caution. Therefore, the trend line stands out as one of the most critical levels that investors should monitor closely in terms of both direction and risk management. But looking only at trends is not enough. Other metrics must also be considered. Stay tuned. Looking back on the chart, a particularly notable price behavior stands out. A similar pattern had previously formed, and we had clearly observed how it influenced the price action. At that time, the price had reached a certain peak level, but initially failed to break through it, moving sideways for a while. Later, as market momentum increased and buying pressure intensified, the price broke through this resistance and initiated a strong upward move. Immediately following this breakout, the price exhibited a steady rally, offering significant profit opportunities for investors. This previous scenario serves as a textbook example of the principle in technical analysis that momentum increases following the breakout of key resistance levels. When the price tests the same level again, it reinforces the significance of that resistance. By the 3rd or 4th attempt, a breakout typically signals a strong upward move. Market participants view such breakouts as trend confirmation and tend to increase their positions accordingly, which accelerates the price movement. Currently, a nearly identical event is unfolding. When we look at the current price action, the price has once again tested the level it previously struggled to break and has now clearly moved above it. This development is significant because these types of patterns are defined as breaking a double top and forming a new higher high, producing strong technical signals that the uptrend will likely continue. Moreover, the formation of this new higher high indicates that buyers remain active while sellers appear to be weakening. For many investors, such breakout points are seen as opportunities to enter long positions. If the breakout occurs with high volume, meaning there is a notable increase in trading activity as the level is surpassed, This serves as a key indication that the breakout is real and strong, not a false move. This reinforces the expectation that the price may continue its upward movement, not just in the short term but also in the medium term. Additionally, such breakouts are often followed by a brief retest phase. The price may revisit the broken resistance level. If this test is successful, meaning the price bounces back upward from that level, then the resistance becomes a strong support. This is referred to as a role reversal in technical analysis. The former resistance turns into a new support. A similar pattern is currently forming. With the price breaking past a previous peak, buying pressure has increased, and upward momentum is clearly taking hold. This suggests that the price has strong potential to reach higher levels in the near future. Of course, market news flow, the overall trend structure, and indicator confirmations should also be considered. However, from a purely technical perspective, this breakout alone strongly indicates the potential for new highs. In short, a price behavior previously observed is reoccurring now. Just as the price previously initiated a strong rally after breaking a key resistance, the same pattern has emerged again, and this time the price has clearly moved above that level. This aligns with the technical principle that once a top is broken, new highs follow, providing a clear signal that the upward momentum may continue. For this reason, investors should closely monitor this breakout and remain open to new opportunities, as it could be strategically beneficial. When we look at the vortex indicator, we're faced with a particularly noteworthy situation. The blue line is currently above the red line, which could signal a strong wave of buying activity. In technical analysis, this indicator is quite effective in measuring the direction and momentum of price movements. The blue line staying on top suggests that the market is currently under buyer control and that the upward trend is gaining strength. This kind of setup typically indicates either the beginning of a new uptrend or the continuation of an existing one. The distance between these two lines also provides important insights. If there is a clear gap between the blue and red lines, and that gap is widening over time, it implies that upward pressure in the market is increasing. This condition is a technical signal that price movements are built on solid ground and that a sudden correction is not expected. In other words, the price has the potential to continue moving upward not just temporarily, but as part of a longer-term move. Looking at similar situations in the past, during periods when the blue line stayed above, prices steadily increased, and those uptrends were often supported by broad investor interest. This suggests that a similar scenario could unfold now that we're seeing the same pattern again. However, since relying on a single indicator is not sufficient for decision-making, it's important that this setup be confirmed with additional technical indicators. In the current structure, the blue line turning upward and maintaining that direction indicates that prices are inclined to move higher. If this line holds its position or continues to rise, it will continue to be interpreted as a positive signal from a technical perspective. Market participants typically monitor such signals closely and adjust their strategies accordingly. In conclusion, the analysis based on this indicator gives us a clear sense of the market's direction. The blue line staying above suggests that buyers remain active in the market and that prices could be aiming for higher levels. Of course, for this scenario to remain valid, the current setup must be maintained. If it does, the likelihood of a strong upward trend developing in the market is quite high. That's what the vortex indicator is for. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.